You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call around these parts, Ye Old Options Insider Radio Network. Quite a few programs for you guys to enjoy on the old network, including many, well over 100 archived hours of Volatility Views goodness for you guys to check out. How can you do that? Where can you find all of that goodness? Well, of course, you can always grab it now on the live stream these days. We're back streaming live. I am back from my gallivanting. We'll get to that in a little bit. But we are streaming it live, of course, via MixLR. So if you want the immediate gratification of listening live, MixLR is the easiest place to do that. Just grab the app, or, of course, just follow us on Twitter or on Facebook, where we tweet out or Facebook out that link to the chat room. You can stream it live. You can ask questions if you make an account there. Or, of course, you can always hit us up via the usual platforms, Twitter, Facebook, etc. By the way, if you're on there and you're following us, make sure you participate in that options broker madness. It's pretty fun. Some interesting upsets shaping up so far there as we pit all the major brokers against each other to see who will be the ultimate winner there. So check it out. We got another, as long as the tournament goes on, we'll be doing this. So surf on over, see who's battling today in our broker madness, and cast your votes. Vote everywhere. Vote on Twitter, vote on Facebook, vote via email. You guys are doing all of the above. Vote on our website. As we say in Chicago, vote early, vote often. And more times you vote and like and retweet and things on Facebook, the more times you'll be entered to win some fabulous prizes. I'm going to give away some tablets, I believe some Fire tablets, and maybe some nice cool gift cards, places like Amazon and stuff, and maybe even some cool Options Insider prize packages. We have a lot of cool gear and fun things that we only really give out to staff and a handful of others, but once in a while we give them out to you guys as well. Maybe also some cool tchotchkes and things that we accumulate from all the various shows we go to all the time. So vote early, vote often, participate in the Options Broker Madness. And of course, always find our content via the other platforms, iTunes, TuneIn, Stitcher, etc., and also via our mobile app available for iOS, Android, and the Fire OS. So no shortage of ways for you guys to join the party, join the fun, make your voices heard to us, as well as to your fellow Options Insider Radio listeners. And joining me, he gets the points for determination on this episode. Joining me from, not from his usual corner office, But from scenic and lovely Terminal 3 over there, I believe in the Fort Lauderdale airport, is Mr. Russell Rhodes, a.k.a. soon-to-be, hopefully, Dr. VIX. Mr. Rhodes, welcome back to the program. Thank you for joining us from the lovely... Are you in Fort Lauderdale airport?
I'm in the corner of Terminal 3, like you just mentioned it. And it's pretty crowded around here right now. But the one thing that I really want to talk about is option swag. I've never gotten anything from you, and I've been on here for months.
Oh, well, you know, Mark, he comes to the studio every week. I think part of the reason is he can pick through our stores of awesome options insider gear and things. So you might want to get over here one of these days before he picks us clean. We'll order more, of course. But yeah, he was going through our stores just last week. He's probably coming over here now to do the same thing. So we'll see. He likes to outfit himself in the latest options insider gear from Land's End. So you should do so yourself, sir.
Why am I not invited over?
You're in Fort Lauderdale.
I'm really putting you on the spot today. I mean, but in general, I want to come over. I want to see the new palatial studios.
I don't know if it compares to the palatial corner office, but we'll do our best. You're welcome over any Friday you want to come over for the show, sir. You want to leave the palatial digs with the foot rubs and the back rubs and all that stuff and come over here and slum it with us little folk over here. You're welcome to do so, sir.
But it's obvious you never worked for an exchange before.
No, I haven't. I just have the grandiose images of largesse in my mind. All right. With all that fun set aside and Russell beaming in, it's time to beam right into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review. This is, of course, a portion of the show. We break down the week that was from a volatility and trading and analysis perspective. And Russell, you and I head down, and the rest of the industry pretty much heads down to the Futures Industry Association, FIA conference this past week. And pretty much while we're all gone, volatility just kind of fell out of bed. Who saw that coming, huh?
Well, apparently none of us saw it coming because I think we're about 3 or 4 points lower than any of us guessed.
We're about four handles away from our lowest
prediction part. Yeah, but still,
we're 4 handles away from our lowest prediction, I believe. So yeah, it wasn't the most rousing of crystal balls for us last week. That's why that segment is so fun, because it always is also so shaming at the end of the day.
Here's a contrary indicator. Later today, I have a general news reporter that wants to ask me about low VIX.
Are we there already?
Somebody called up and asked.
Actually, you know what?
This morning, and asked PR if I could talk to him about low VIX later this afternoon.
You know what? I was just going to say, yeah, we are there, because in my mind it's usually 14, and we're at 13.95 as we're recording this. Of course, listeners, and streaming it live here on Friday, March 18th, and 14 in my mind is usually when the broad media starts to awaken to that, and they start seeing that drumbeat. VIX is low. VIX is low. It's partly your fault, Russell, and you guys over there at the SIBO. You put this mean reversion of 20 in their heads, and the second you get away from that now, they're going to start calling you saying, why are we so far away from that 20 handle? So I really blame you at the end of the day.
I think the second you hear somebody on CNBC say VIX is broken again, that you got to short the equity market.
Yeah. Well, before we get into our rundown for the week that was volatility, we just came back, like I said, from the big Futures Industry Association conference. Not typically a hotbed of all things volatility. Usually it's kind of a place where all the exchanges and brokers and some vendors all get together. A lot of networking mostly, quite frankly, and some panels and things, but mostly it's on the networking and sharing information and catching up with people kind of side of the fence. So not usually a hotbed of breaking options and volatility developments like it was at SIBO Risk Management Conference a few weeks ago. But there were a few interesting things. You guys had your event there, as always, Russell. Interesting stuff talking about some of the tech things you guys are working on, which I think we'll get to on our Trading Tech Talk program maybe later next week. There was some interesting stuff afoot there as well. But you guys also did a presentation on VIX. You want to give our listeners a quick rundown of what you guys hit on there, Russell?
Well, there were a couple of things VIX oriented. The first one, the one where we spent about an hour and a half with the different exchanges that use the VIX methodology, it was actually Bill Speth and Dominic Salvino, the specialist and the guy in charge of our research department, just talking about the creation of the VIX Options. The VIX Options had their 10th anniversary back in late February, and it kind of slipped by without anybody saying anything about it. But they just talked about how several market makers passed up on it because they just couldn't figure out how to model those things. And Dom was probably the first person that figured out you should use the corresponding future and approach them more like a commodity option. And then we did announce at our press breakfast that overnight VIX is going to start, we're going to start quoting VIX sometime in April, starting at 2 a.m. Chicago time. And I was talking to our chairman, and he was joking about something else. And he said, I wake up informed every day. And I think that'd be a great slogan for overnight VIX. Wake up informed. You can check your S&P quote and check your VIX quote starting next month.
Uh-oh, the marketing arm getting in. I like it. So wake up informed with your VIX. You're right. I was at that briefing very early, as you guys always do, 7:30 in the morning, bright and early, which in Boca time, when you're up late the night before, probably at a variety of events, is a little earlier than it sounds even. But yeah, so it's sometimes hard to wrap your brain around all things volatility at that early hour without some good coffee in you. But you're right. There were some interesting developments, takeaways there. And now that you mentioned it, the 10-year anniversary, it is kind of crazy to think about that. It doesn't seem like that long ago when I was sitting there at the SIBO talking to your former CEO, Bill Brodsky, about that exact thing and the notion. And he was telling me about how they were planning on launching VIX options. And I remember thinking myself, as a former SPYIX guy, I was like, who the hell is going to make markets in these things? This is going to be, I could see the use case for the end user, but if you're the guy out there standing there making markets, you're essentially just providing a layoff product for the rest of the SPYIX bit. Because what's the one thing the SPYIX guys had wanted for years? They wanted to lay off that vol risk. That was kind of the one thing you couldn't really easily do. You could spread it in things, obviously, but it wasn't like the S&P future. You can turn around and hedge away your delta risk and you were kind of good. There was no equivalent of that for the volatility risk component of your portfolio. The VIX futures were ostensibly going to offer that, and it seemed like that was going to be a nightmare for whoever. And you're right, a lot of firms ran away from it at first for that precise reason. It was a complex thing, and of course it was also extremely risk additive. And here we are 10 years later, and it's probably the biggest hit in the product stable. Would you say so?
Oh, yeah. Over the last decade, it's got to be the most. And of course, I work at CBOE, and it's going to come across that I'm being biased, but it really has been the most successful new listed derivative product put out there in the last decade or so.
And we are just joined, if you hear some noise in the background, listeners, by the greasy meatball himself, who is already busy, not exactly searching through our vast stores of items this time, but actually changing our studio TV here to get the March Madness on. Well, so that's his priority for today's show.
To be fair,
welcome on, sir.
To be fair, it is Villanova playing, my alma mater, and I'm just trying to find the channel that they might be on. I don't know if you've got. We've
got everything in here. I have no idea which one ESPN is.
Is this satellite or no? It'd be either TNT, TBS, or
while we work out those.
There we go.
There it is. There it is.
All right, let's go Nova. So quite the week. I gotta say I don't think anybody saw this vol smash coming.
No, certainly we were just joking. Certainly not us.
Whack. No.
We were all 4 handles ahead last week.
I've just been shocked the way they took this stuff down. Not even after the Fed. They started creaming this stuff before the Fed. There was zero volatility bump ahead of the Fed. It was just sell everything, and that was that. The other thing, though, is before everybody gets so excited about this 13 handle, I don't know if Russell's talked about this yet, but the spread between the April future and the cash index is, you could steer an aircraft carrier through that spread. It is pretty darn wide, and that's kind of one of the pieces that I've really noticed as well, along with the near-term vol smash.
Russell was just saying before you walked in that he's already getting the PR requests through the exchange for the why is VIX so low why is VIX so low time. So we're already in that regime, Mark, in case you're wondering.
I mean, the VIX is low. 13 is low, but apparently the answer is we're not going to be moving around very much for a little bit. And there is some real opportunities there. A trade we were looking at. And Russell, let me know, and Mark, let me know what you think. One trade we really were playing around with was long S&P straddle, short VIX future, or short VXX, taking the veg out of the equation, or really going long the cash index, kind of the best way you can, and going short the future against it, and playing either a increase in volatility or similar volatility and hopefully gathering some of the upcoming vol smash in the future.
We're just talking too. It seems crazy, but it is 10 years ago that the VIX Options launched, which is a crazy town. We were kind of just walking through some historical reminiscence as you walked in the door here. We've already lost Mark to the March Madness.
No, I'm listening. I'm listening.
He's deeply in tune to the game. By the way, you have to vote in our options broker madness.
I know. I'm gonna.
There's some interesting upsets shaping up already there. Which let's just say for the first round we were kind of stretching to make sure we found 16 options brokers that were at least of relevance, and there's already been some upsets.
Floating. I mean there are some of the big brokers where people probably are realizing, maybe what they give me and what they charge me isn't such a great deal. And then there are other brokers where, maybe this is one of those things. One of the neat things about this tournament is, I'm looking through it and I go, I hadn't thought about SOGO trade in a year. Maybe that's something I should look into and read about. And hopefully, at a minimum, the Options Insider is making people spend some time looking at firms like Lightspeed that bought LVX bought the LVX rights from Livevol when they got sold to CBOE, or they're looking at some of the different names. Obviously we're sponsored here by the Livevol folks, so I'm not saying we don't have a little horse in this race, but there is a lot of brokers that maybe people haven't heard of or don't know too much about that hopefully this encourages them to look into.
What was that, Russell?
I said vote Livevol.
Livevol.
I wanted to touch on what Mark said about the April future at such a premium to the spot index right now. Keep in mind it's one of those 5-week between standard expiration periods. So, we do have an extra week in there. We got an employment number. We always seem to have an extra point and a half of juice in the front month future until we get past the employment number. So, it's high, and you can't drive a truck through it, but there's a couple of circumstances there that might justify it being high. Yeah,
at 30 days to expiration, I'm thinking 2.5, maybe 3 points. I'm not typically looking for near 4 points of spread. That's exceedingly wide. I think another factor is likely that extra day off and the anticipation that, traders are going to go on spring break here in the next couple of weeks.
I just came back from Fort Lauderdale. Russell's still down there. He's beaming in from Terminal 3 as we speak at the Fort Lauderdale airport. I can certainly attest to the fact that there are quite a few people already on spring break down there, Russell. Russell, before we move away, any last takeaways that you saw from this week down at Boca that think would be of interest to our Vol Views audience?
Well, I'm going to make here's a stretch. It's not necessarily volatility oriented, but do keep an eye out. Before the end of the month, we're going to start trading options on the FTSE, the FTSE 100 and the China 50 as well. That'll
be neat.
Yeah.
And disseminating VIX all day as well.
Yeah, we did hit on that too. We hit on the disseminating VIX and FTSE. Yeah, FTSE coming to a trading screen near you. The options pretty soon, so that'll be kind of interesting.
Yeah, and I was noticing you guys were commenting MSCI, the EM cash index, starting to get a little activity. I think that's one of those indexes where, as people realize, I can get a cash index version of this and not have to deal with delivery and all that junk and early exercise. That it'll get something. I actually did on our, every week at Option Pit, we do a trade idea of the week. I'll just, trade like a one lot just for the fun of it. But I already had some existing positions in SPY, so I decided, hey, if I want to do something instead of SPY, why not XSP? So I played around in some XSP today. So I think all of these cash indexes, the Russell ones, a lot of the neat ones, a lot of these are as people realize that, you know, all the benefits of dealing with a cash index as opposed to the ETF or ETN, there may really be something interesting there.
XSP doing a whopping 328 contracts today. 29-1 puts over calls out there in XSP land.
Now,
so people not loving themselves some XSP calls.
Well, now, here's a question. Why doesn't the SIBO, you know, Russell, one of the things you have is kind of your constant rolling 30-day future that you like to keep track of. You know, it's one of the things I've definitely seen you talk about in your different VIX stuff when we've done presentations together. Has the SIBO thought about doing options on a kind of 30-day VIX future that, you know, on that kind of 30-day VIX futures price that would settle into cash or anything along those lines? Because I think that would be a fun product and maybe put VXX out of business.
You got me on that last statement there. I was on a roll, and then you say put VXX out of business, and I think of a chart when you say that of VXX.
Yeah,
it looks like something going out of business.
It does look.
It's good. It does what it's supposed to when it's supposed to.
Right.
Do
it does.
No, that's an excellent thought. I will pass that one on to the powers that be as far as using that 30-day index.
That would be a fun. That would be a fun index to trade.
An index like that doesn't have the roll issues that the other one has, you know, might actually be kind of interesting. You know, I'm thinking out loud here while they're boarding right in front of me. The one thing is how do the market makers go about trying to hedge something like that? They would have to rebalance their hedge every day.
Oh yeah,
and then they get a disconnect, but. You know, there might be something to do there. That's actually a pretty good thought because it would be a more steady exposure to the front 2-month futures.
Yeah.
It's no fun if it's not incredibly wasting on a daily basis, though, which is part of all the fun, I think, of VXX at the end of the day. Speaking of fun, it's time, I think, for the part of the show that I think Mark and I think is one of the most fun just because it has the best intro. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
I wish the people in the terminal next to you, Russell, could hear your theme music as you tell us what caught your eye in the week that was from a weekly options perspective, sir.
You should see how many ugly looks I'm getting as I do this program already. The last thing we need to do is blare that through a speaker.
You should just turn the speakers up.
So looking at the weeklies, you know, we've got 4 weekly expirations between now and the next standard expiration. Something that caught my eye, the 17 line on the put side, the ones that expire next Wednesday, you got pretty heavy open interest there. What really is catching my eye is with VIX relatively low, you don't see anybody coming in and selling the like 14s or 15s. We're just not seeing, you know, extra activity there, which makes me wonder if the put sellers are getting out of the way for the moment.
There's been tons of put buying activity today, Russell. Just crazy. You know, there was a big buyer of like the 22-17 put spread. There's buyers of all sorts of puts floating around there. Now, we're also seeing lots of call buying. Barclays came in and bought the June quarter 30 call spread, another chunk of those traded today. There's tons of activity. It's just been really interesting to see how puts have really popped. The put volume has just completely popped over the last couple of days, and that's partially because of that crazy spread between future and cash, is my guess.
Well, I was really focusing in on the nearer dated ones. In the weeklies, we seem to have consistently had put sellers just taking advantage of short-term, you know, not enough time decay to get them in trouble, and they seem to be concentrating on the 16s and 17s, and now they're not coming in with VIX at lower prices. Like either they're not trying to salvage the trade, or they're thinking we might still get a pop to the upside.
Yeah.
You know, interesting stuff there. You're talking about moving on to the paper Mark was talking about there, some of the more the longer term, longer dated beyond a week paper. You're right. It is lighting it up. It has been a pretty sizable volume week. I think that just proves, Russell, we need to go away, and then the numbers starts flying and the vol starts getting crushed. It was a pretty rough week, or big week, I should say, overall from a volume perspective, with about 600 to about 600 to about 900,000 going up contracts yesterday out there in VIX options land. As we sit here today, right about middle of the session, already about 500,000 contracts, just ticked over the 500,000 contract level. So it looks like today is going to be yet another robust day. We've seen some size prints going up, as Mark was alluding to earlier. Looks like also perhaps a vertical or maybe even a stupid there out there in the May timeframe, the May 28-30 vertical / stupid. I haven't had a chance to dig in because they both went up exactly mid-market, of course, going up for 60,000 times. So already some big prints going up as well. We also saw a big vertical going up out there in April. It was the April 2025 going up with paper buying the 20s and selling the 25, so picking up on some upside there, 25,000 times. So those two trades already having done nearly 200,000 contracts just between those two. So a lot of paper going up today. We saw yesterday a size ratio vertical spread going up, one of our old favorites this time, paper buying. It was the June 17-23 one by two exactly, 109,000 by 218,000. Paper buying the June 17, selling 2 of the June 23s. There is a fair bit of open interest on some of these strikes, actually, but not enough to cover these. So this is open in paper out here. So looks like we're seeing a bit of a shift too, also to a little bit longer term. Wednesday saw a bunch of size spreads going up as well in terms of also playing in June yet again. The June 25-30 going up 45,000 times over there as well. So it seems like the order of the day this week was size pretty much wherever you were looking. Also a May, looks like a May 32.5, July 35 vertical, also / diagonal going up about 25,000 times as well. So a lot of size paper going up this week, including today, and a lot of it, again, focusing on the upside. You're right, not too many people coming in and playing with the puts, at least from a size put selling or trading or whatever going on, at least here earlier in the session today. We'll keep an eye on for the rest of the session. Going out here, looking at what's been lighting it up from a hot strike perspective, what people have actually been trading over the past week or so. And again, mostly calls all the time. In particular, starting it off, again, paper a little bit lighter, open interest a little bit lighter, having come off. We're in the middle of that cycle, or the start of that cycle, I should say, as Russell was alluding to earlier. About 250,000 of the April 16s, April 25s kicking it off with about 250,000 open of those. It's about the same number of the June 23, so June getting some love again, as we were mentioned earlier. The May 16s, number 3, with about 238,000 of the May 30 calls. Open number 4, the April 30s, also optimistic, about 235,000. Then we fall off a cliff to the April 28s with about 161,000 on the number 5 of the top 10, 150,000 of the April 27 calls. Also open number 7, the June 17s, again, going back to that spread we were talking about earlier, 121,000 open there, all the way down to number 8 to find our first put on the list, the June 20 puts with about a little over 100,000, 107,000 contracts open. Then the rest of it is all calls all the time. July 35s, as we were talking about earlier, 105,000 contracts open there, and about 101,000 of the May 28s total. 5.3 million contracts open out there, about 4 million almost exactly on the call side, and about 1.25 million open on the puts. Aside from that stuff, I was just running down any other paper catching your eye out there, Mark or Russell, in terms of the ever so popular VIX options.
Nothing crazy in particular. As I stated, did notice a lot of medium-sized put buys. That was interesting to me, mostly in April, but there was some weekly trading there too. A lot of people looking at I think that spread and thinking, hey, there might be some money here.
Anything else catching your eye, Russell, before we move on to the realm of crude and gold and all other fun things?
Well, I'm going to have to be a company man and talk about SPYIX real quick. The Wednesday weeklies that have only been out for about 3 weeks, they on Wednesday this week, the Fed day, they actually traded almost 100,000 contracts, just the Wednesday expiration. And they're averaging a little over 55,000 contracts so far. So people are finding ways to take advantage of those.
Yeah, the Wednesday, well, the weeklies in general, and then the Wednesdays being the latest edition, seem to be lighting it up. Of course, days like Fed Day, kind of the reason those things were created. So good to see that they're performing in the time frames they were supposed to, unlike some other recent editions, like some of the other products we used to talk about on this show that were created for short-term vol and for whatever reason never really seemed to resonate. Speaking of products, maybe we'll get to some of the other interesting ones we've been talking about recently here in a little bit, maybe in the listener mail. But before we get to that, let's move on to some other products that have been exhibiting a wee bit of volatility of late, including our friends out there in the land of all things Texas tea, black gold, call it what you will, crude oil, kind of on a bit of a downswing from a commodity vol perspective, hovering right about in the mid 40 handles right now, about 45, 46 in the OIV, OVX land. Again, we flirted with some multi-year highs about a month ago, back in mid-February, with both OVX and OIV flirting with that 80 handle ever so briefly, and then kind of retreating right away. So it seems like that was a bit of an aberration, that brief spike. I don't know, Mark, we talk a lot about volatility regimes here on this show. You think now that we're kind of in this pretty much at least month-long or so about protracted downtrend from a vol perspective out in crude land, I think that's pretty much our new regime going forward here, this back to the mid 40 to 50 handle range in OIV, OVX?
And then lower from there. I mean, I think that what you just witnessed was kind of oil's November 2008, where there really was a real panic belief that, hey, maybe oil can go to 10 or 15 bucks. And then the realization that, oh, no, you know what, now that everybody's out, we can rally it back to 35, 40. So, maybe it does at some point creep back and take out new lows at some point. But I think the panic, the crazy hedge that happened is, the crazy call and put buying in oil is over, and we may see it drop a little bit, but you might not even see a 6 handle on OIV or OVX again. And this time next year, we're going to be talking about these indexes back in the 20s where they came from.
Going back where they came from. Speaking of which, looks like skew land out there, in particular in the WTI options, has been interesting. We talked a lot in recent shows about how it was pretty much all puts all the time for the better part of the last few months out there, going back all the way to Q3 of last year, really, when they're talking about the premium driving the puts out there in WTI and related products. And that has since, as the vol has lessened, that has since lessened a bit as well. We saw, of course, looks like maybe approaching a bit of an inflection point when crude had that bit of a spark rally there a couple of weeks ago. We saw people piling into the calls. It kind of lessened there as well, but it seems like overall the extreme bid to the puts is getting a wee bit weaker, a little bit flatter skew out there. Is that kind of pretty much your takeaway as well? I know you've kind of been off in the volatility hinterlands like I have all week, Russell, as well, but anything really catching your eye out there from a Texas T vol perspective?
Well, I think everybody that was going to hedge against lower prices got hedged, and as we've moved higher, they've still got those positions on. They're not adding to them because now they're benefiting from higher oil. Well, what I thought was interesting is I love when you hear or you see popular press stories about why oil's going to go up or go down, and they attribute something to option activity. And I actually saw an article that said that oil won't go up because all the producers are prepared for lower oil.
Well, there you go. You got
so the higher skew was good, but meant that they didn't care if oil went up or not. I don't. It was kind of silly in my mind, but I couldn't completely wrap my mind about what they were trying to say with that one.
Looking at some other commodity vol stories here, of course, the other thing that was kind of top of mind for a lot of people from a commodity vol perspective over the past month, kind of following a similar trajectory now to crude going back down here, is of course gold. It peaked also right around that same time frame, mid-February or so. GVZ, which is of course the gold VIX, tracking the vol of GLD, but we also saw it out there in the big gold options as well. Spiking GVZ hitting a high of about 28 back in mid-February. Pretty much about a 2.5, nearly 3-year high for that index out there, hovering right around, as we're recording now on Friday here, right about 18 or so. Actually coming off again this week. It was in the low 20s earlier this week, and it's pretty much been drifting lower all week. So it seems like a similar narrative playing out here in gold land. We had that sharp upside move. Everyone and their mother was talking up 1x2s. I saw relatively staid research desks at a lot of big investment banks coming out and saying, trade 1x2s. It's the best trade ever. And so when you see that kind of stuff, the skew is getting a little bit, shall we say, distorted. Things are kind of getting back into line now. The calls are still the order of the day, but not by much. We're getting closer back to that somewhat traditional commodity smile type shape out there in skew land from a gold perspective. Mark, I know you like playing around and looking at GLD. Anything catching your eye out there from a vol or a skew perspective? You think we're kind of back?
The vol's crazy. I mean, the vol's still too high. And, the big piece that I actually noticed, this is in gold in particular, was, this got pointed out to me by Skip Ratchke, another smart trader. I don't know if you know him, but gold is now trading at a premium to platinum again. So what we were looking at was doing kind of a buy right, or a married put trade where you buy a put in gold and buy platinum outright because there's no options on platinum. So like PPLT long versus long put in GLD, and potentially win twice.
Metals pairs trade. I like that.
Anytime you see gold get over platinum, it's time to put that trade on. That it can stay there for a little while, but it always fixes itself. Platinum is a far more rare substance and far more valuable than gold.
Not quite as shiny though. Gold has that shiny luster to it.
Yeah, I know, but platinum is what you really want your album to be, not gold.
Who cares about supply and demand when something looks so shiny?
There's a reason why an album that sells 1 million copies get platinum, not gold. And gold's only 500,000. So think about that when you're next time you're thinking about platinum versus gold. Of course you want platinum. Platinum rules.
Put that in your metals pipe and smoke it. Russell, in addition to all your schmoozing and networking this week, you've been paying attention to any of this gold VIX out there?
I noticed it came in, and then I also noticed that the term structure kind of flattened a bit, but it still seems to be a bit skewed to the upside, like a just in case we get another spike to the upside in gold. So it looks like the options are more concerned about upside than downside from here, even though it's kind of coming in right today.
Yeah.
They're begging you to put on a long 1x2, a call 1x2 in that thing.
Uh-oh. Now you're on the gold 1x2 train as well, sir.
Who's not on the gold 1x2
Let's all this pile into. Let's do some platinum gold pairs trading. You're right. There is no platinum options. It kind of ruins the fun a little bit.
I
there.
know.
You got to make me slum in the underlying, like a hobo or something.
The slumderlining.
But interesting stuff nonetheless. A lot of things. You're right. It still is a little rich to the upside, but nowhere near as aberrant as it was about a month ago.
I like that. The slumderlying.
Slumderline. That could be your
Slumming
new index.
in the underlying. The slumderlying.
That could be your new index people track from Carmen Lying Capital, the slunderline. I'm not sure what you'll include in that index, but I'm sure you'll figure it out to make it a prep. Speaking of figuring it out, it's time for us to figure out what the heck you guys are asking us, because it's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail. This is indeed the portion of the show where you guys take the reins. You get to dictate our questions, our comments. By the way, those of you out in the chat room, if you have any questions or comments, you can, of course, fire them away in the old chat there. I know some of you, for whatever reason, hesitant to open up yet another account. I understand. So hit us up, Twitter, Facebook, all the usual place. Again, while you're there, by the way, participate in the Options Broker Madness. You can win fun prizes before Mark steals them off my studio here. So by all means, hit up the prizes there as we keep rolling along. Meanwhile, let's kick things off. Interesting question, actually. I was talking about this a little bit this week down at the FIA conference. This one comes from George K. He writes, what's the thought process regarding the new SPYIX? I'm going to keep calling it that. I'm not going to call it SPYIX. SPYIX and hedging. Can you hedge it with VIX Futures? I was actually chatting with a few of your compatriots down there at Boca, Russell, about this exact thing on that extremely early briefing they had on this. And you just mentioned Bill Speth. He made an interesting point about a couple of interesting differences between, of course, your traditional SPY volatility and a product on it and the VIX. Of course, first off, American versus European. So that's going to cause a little bit of a hink. And also the way they're calculating for that dividend is going to make some hedging a little bit, perhaps not quite the one-to-one beast that you may like. I mean, at the end of the day, they're probably, if this thing takes off, it still will, of course. It'll still probably accrue a lot of hedging activity in the VIX futures because it's still, even though it's not one-to-one, it's kind of the closest game in town. So that'll probably be a good thing for you guys at the end of the day over there in the futures land. But still, interesting stuff. I know, Russell, you kind of been mulling this over this past week as well. You have some thoughts on this one?
I'm going to call it SPY9.
All right, I like that too. I can go for that.
That's my name for it. It's SPY9 because it's probably the 9th attempt to come up with an alternative to VIX that won't work. So the I was in a quiet period.
Russell, he had me muted.
Nice. Now I'm going to say that.
Are there tradable products on it?
No,
they don't even have.
Okay,
it's just an index right now.
That's the deal right there. Is it's going to have a little bit different quote than VIX, and we mentioned that they're pretty much going to be in line with each other. But VIX is the one that the futures and the options and all the ETPs out there are based on. So that's the one that you still want to keep your eye on. But there's no way that you can really hedge SPY9 because SPY9 is only an index, and just like VIX, I don't think that you can easily get exposure to SPY9. And in fact, because of the European versus American style thing, it would be even more difficult to get exposure to that new competitor.
Well, and let's not forget, and Russell, let's not forget that one of the things that's really, I think, helping VIX now is SPYIX options are eventually going to stream just like the S&P futures options. VIX options are streaming. You're going to have 24-hour dissemination of the VIX cash eventually. And do you think they're going to be able to get 14 exchanges to agree to scroll and stream SPY quotes all day? That's going to turn into a real headache. And listen, like I said, like I said last week, I love the T3 guys. VIX backed by Goldman, SPY9, I like that, Spine, if you will, is backed by T3, which is a stock arcade. So I think you're gonna have a tough time moving the institutions and anything like that, and that's gonna be a real problem. But hey, you know what? It's nice having a vol index on SPY. That will maybe give you some hints as to when the volatilities are maybe diverging, or maybe there's something going on in skew. Who knows?
I do like the SPY9. I may have to borrow that, Russell.
Spine
is also good. Anything's better than spikes. I just can't.
And then when this goes, and when they stop quoting it, we can call it spineless.
You guys are so down. The thing hasn't even started yet. Let it get out there before you kick it in the teeth.
You've just combined. I mean, one, it's the Bats exchange. Two, it's clearly a blatant ripoff. Just they're using SPY. And then three, it's got a really dumb name.
At least it's not stripping out like valuable information like the skew the way the Voldex did. I mean, I understood that from a point of differentiation. You have to differentiate yourself somehow, so they chose that. I didn't see it as a really meaningful, very differentiation. Kind of you're losing some data there, which people actually want. And talking, I did ask that to the Bats guys. I said, how come you didn't do something like that just to differentiate yourself? And they kind of agreed that data is actually, people want that. People want that skew data. People think the upgrade to VIX a few years ago where they added that, and of course brought it onto SPYIX as well, was all valuable data. In spite of the claims about settlement and the carpet bombing and stuff. That stuff aside, that stuff actually has some merit. What's going on, the puts versus the calls has some value. So stripping that away doesn't make any sense. But so it'll be interesting. They're going to disseminate this thing. I think they're still waiting. They have no approval of any sort of tradable product yet. So that's going to be, quite a ways in the distance before we can even trade it. Our friend George, and probably a lot of other people were talking about this down at Boca this week as well. So clearly people are thinking about this now. It'd be interesting to see if and when they do list, if that does start, accreting into the VIX futures. I can't imagine we're also going to go to hedge it, so that's probably going to be the place they're going to go. But still, interesting thought questions from our listeners. I love the way you guys think. Moving on to a question from BJLane. He writes, "Hey, VIX."
BJLane?
Not DJ, BJ.
BJLane. I love it.
VIX versus RVX. Which performs better for call verticals? Which pops better when it hits the fan? There's a huge caveat I got to put in this one before, even before we get into, any sort of technical merits of one versus the other, is just logistically. Let's pull up. We like our friends over there, Russell, and they, of course, our partners on the program. We've talked about it many times on this show. The issue you're going to encounter with anything in RVX is, of course, the spreads are just still going to be very wide because there just is no paper out there. I'm pulling it up for today. The ADV out there in RVX right now is 7 contracts. The open interest is 133, and it's kind of been at those levels for quite some time. They had some spikes there. I remember, Mark, when kind of Russell and VIX diverged for a while there. We saw some paper flocking into RVX. Since then, it hasn't really resonated. I know just talking to those guys this week down at Boca, again, they're trying to do some things to spark some life into there. But if you're going to go in there right now, RVX hovering right around the 19 level. Let's look at the 19 calls out there. Oh, they're only a nice $1.60 wide out there, Mark. So even thinking about trying to do any verticals or 1x2s or ratios in RVX,
you need a broker that can get stuff done open outcry. That's the only way to really do it. So you need to be big enough that you can go down in the pit, get a real quote, and then trade around it.
You're not going to get 10 off.
Yeah, and the other piece of my question would be really, it depends on what you think, and Russell might have, I'm going to let Russell kind of expand on this, but I think it really depends on what you think the root cause of the vol pop is going to be. I'll give Russell a minute here to expand on it because he knows more about the two, but it's my understanding that depending on the cause of the panic, one index is going to move more than the other.
What are your thoughts on that combo, Russell?
When you get a global panic, you get the spike out of VIX, and VIX relative to RVX usually narrows tremendously. And we saw that back in the fall. And as I'm speaking, I'm tripping around on my laptop and trying to put a chart out on Twitter and tagging the Options Insider, showing the relative relationship between the two. And typically when we get a global volatility event, VIX moves up more than RVX. So not taking liquidity or anything else into account, VIX for a volatility event is probably a better hedge, or owning calls on VIX is probably a better hedge than owning calls on RVX if you were able to. Now on the other side of things, I've been doing some work on RVX, and if it's more overpriced, I don't know how to say that correctly. I'm a numbers person, but more overpriced relative to realized volatility than VIX in a low volatility environment, and it actually kind of is. So RVX is a better short volatility instrument than VIX on a pretty consistent basis as well.
Yeah, that was kind of those findings coming out of those Russell studies we talked about a couple of weeks back at RMC. Was the risk premium priced in there was pretty juicy. So if you can find some way to navigate those spreads in an efficient way, that's a big if you're looking to harvest premium. But if you can find a way to do that, then that Russell, that's what we talked about.
That's interesting.
That's what you talked about when those products launch. Inherently, structurally,
they should have
small
more.
Caps should be attractive from a premium harvesting perspective.
Well, so I got to figure out how, maybe this is something we'll play around with the Carmen line, but, my question is, if I want to, I'm going to give up all of the quote, the edge differential in what the bid-ask spread is on that thing. So tell you what, after the show, I'll go down to the floor and I'll get a real quote from the RVX on a, I don't know, Russell, give me a 5-point vertical I can quote that's maybe, I don't know. What do you think, Mark? We'll quote April because that's the front month, And
just do the 2025s.
Yeah, I'm looking right here.
Where is that? 18.
It's at about about 19. Yeah, you can do the 2025 is pretty wide.
How about maybe
2023 or something like that?
I'll do the 21-25 call spread.
Okay.
All right, and I'll get a quote when I get out of here, and I'll see what the real market is on stuff like that for the institutional size money.
It's the size money, the Carmen line money.
Yeah, I mean, hey.
We have a related question here really quickly from Jacro, I'm not sure how you pronounce that. They just say, hey, why is there no volume in RVX? We talked about this a few times. There's a number of issues going on out there that they've even talked about on this show when they've been on, Pat and those guys from Russell, that, they've had problems getting people to trade it in terms of market makers quoting it. Then, of course, there's some issues they actually need with some of the underlying and some other things like that. And, anytime you launch a new volatility product, is going to be, as we talked about with the SPY9 / SPYIX, / spines, that there are going to be some issues with those as well. So everything kind of takes a while to take off, and I know they're working diligently behind the scenes, and maybe we'll see some more volume creeping in. Maybe we just need another period where Russell and VIX just go in complete opposite directions again. And maybe once that happens, because spread trading is where kind of some of the interest starts coming in. And once that happens, people start looking at RVX and saying, oh, this is out of whack. I want to get in there. And that's maybe when maybe the rubble will hit the road and we'll get some RVX love out there. But for now, I'll be interested to see, Mark, after the show. Of course, we'll talk about it next week. Your what you get for a quote out there. I'm guessing it's going to be a wee bit wide, but you never know.
I'm interested in whether we can get it. Whether normally when I quote a call spread in VIX, it's going to be a nickel wide. All right, I'm typically
you're not going to get that.
I mean, the widest. So over the last, and I've traded some call spread the last few days, and the widest quote I've seen was 7 cents. So now with RVX, I'm interested to see whether I can do less than 20. That'll be interesting to see whether that's available.
Yeah, because if you're talking about harvesting, a little bit more premium out there from an implied vol perspective, but if you have to give it all up and more in the spread, kind of loses some of its luster. It's academic.
Actually, it loses all of its luster.
It's academic at that point. Kind of thing you can talk about in a study, but you can't really do in the real world. All right, speaking of which, real world, it's time for us to eat a little crow because it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, that most difficult, shameful, capricious of segments on the program here where we attempt to divine what those ever-fickle volatility gods hold in store for us for the coming week. Last week, I think we were all a wee bit optimistic. I think we could, to put it charitably.
Or VIX were optimistic, maybe not the market.
Yeah, it could not be our fault. Could be the market. You're right. I like blaming the market rather than us. That's a better way to go.
Yeah, for those long-term listeners, we got Mark and I got a heckling email from Don Schlesinger. Basically lambasting us.
Yeah, he was not liking our he was sold to us pretty much.
He was like, you guys are morons. What is wrong with you people? It was pretty funny.
In our defense, he was referring to the week before's predictions, which were like mid-20s, so those were crazy out of whack. We were only a wee bit out of whack. We were predicting,
I was the most out of whack.
Yeah, you were, as usual, you are completely out of whack. This last week, I think I was about 18 to 18.5. Russell was saying 17.5. He was being the Price is Right guy. And Mark was doing the over 19. Of course, as we stand right now, the show coming to a close, listeners, VIX Cash getting a little bit of life back in it, but still well south of those levels, about 14.3 right now. So, Russell, I guess that means none of us really won, but you're the closest to winning, so you get to go first, sir.
Yeah, I was going to say, it's in the Price is Right world, we all went over and we get a do-over.
Yeah. No one gets the showcase. No one gets the refrigerator.
I say 14. Gosh, I think the April futures are right and being at such a premium right now. So I do think we glide a little bit higher. So I'm going to take 16.
All right, I'll make a mental note of that. Here, go ahead, Mr. Sebastian, while I mark down Russell's vote.
Well, now so is this for next Thursday since we're closed next Friday?
Oh, that's true. It is a different day next week.
I want 15 and a half. 15 and a half.
All right. So
Three-day weekend. Oh, my God.
Yeah, we got a long
Thanks,
weekend.
Mark.
So I think on Thursday we may be looking at right where we are here. I'm going to go 14 and a quarter.
And a quarter. I like that. Very precise. You're right. The long weekend kind of gums up the works. I was kind of leaning the way Russell was leaning, but it's going to suck some of that juice out going into the into that
you
final.
Suck at the juice.
You suck.
You suck at the juice. The juice is good.
So you're killing me. That's why I can't have you in studio anymore.
This is why it's so fun when I'm here in studio.
So Mark, you're saying about 14 and a quarter. Russell, you're saying 16. I was going to lean a little bit around this level too. Okay, I'll say elevated, but not crazy elevated. I'm going to say 15. How about that? Because you got to give some of that back for the long weekend. And 15 is about where. Russell, you changed yours to 15 halves. Is that what you did, or you want to leave it at 16?
Let's split the difference. I'll say, how about 15 and 5/8?
Don't make me go back to doing eighths again, sir. Oh, the old days. All right, so Russell, we're gonna reduce it. Russell gets like multiple tilts at the windmill. That's not.
Yeah,
that's not fair. All right, 15 and 5. I'm gonna put you down for that. 15 and 5/8. All right, and then Mark was at 14 and a quarter, and I am of course right around the 15 level. So a little tighter this week. Hopefully Don won't be as aggressively sold in our faces, but he probably will. All right.
Yeah. No, if it's higher, he goes, "I told you there's options you don't sell."
Yeah, sell or don't sell. There is no buying. All right, that's gonna do it for the Crystal Ball segment, and that's also going to do it for this episode of Volatility Views. But before we go, as always, let's look ahead to what's coming down the pike from all of our buddies here. Russell, I know you have to hop on a plane in a little bit, so I'll let you go first. What's cooking in the land of all things SIBO Live Vol?
Well, I'm going home via San Jose, so I'll be out in San Jose for an event on Saturday. Next week, on Wednesday afternoon, I'm doing a webcast at CBOE on the Wednesday weeklies. So that's about all I got going on in the next week.
And Mark's taking phone calls here in the studio.
So Mark Sebastian next week, he's going to be painting a room blue for the next kid that's coming along or something like that.
At the CBOE on Tuesday the 22nd to discuss put writing. I'm going to be sitting on a panel that is sponsored by CBOE discussing how put writing can work, how it can be really advantageous, and you can go to the I don't know exact. We'll put in the show notes where if you want to come and see me, you get to listen to me talk for a little bit, and I think there's drinks afterwards.
I will tweet the link out.
Yeah.
I'll tweet the link out. I've got it right here.
And then on top of that, at Option Pit, we've got we're going to be doing a 4-hour class Saturday, April 2nd, at starting at 9:30 Eastern Time, discussing diagonal spreads and calendar spreads. So if those are things that interest you, you go to optionpit.com/calendar, and as always, use code 25_off in all capital letters to take $25 off, and that's only for Option Insider listeners.
Speaking of $25, the SIBO has a temerity trying to charge me to listen to Mark Sebastian next week. What the heck is that? So we'll see if I swing by your little soiree there or not. But of course, listeners, if you are in Chicago and you do want to listen to such a thing and pay money for it, then by all means, you are welcomed to do just that. And of course, as always, all the fun data, all the other fun stuff we talk about here on the program, also brought to you by our friends, not just at SIBO, but over there on the LiveVol arm. So surf on over to LiveVol, LiveVol.com. Click on that green Get a Free Trial button while you're there. And of course, kick the tires. If your people are always writing into us asking, hey, where do you pull data on this? And where do you pull a lot of your metrics and analytics and VIX call to put or whatever we're talking about? A lot of that comes. In fact, we have LiveVol open throughout pretty much every show we do here. So surf on over to LiveVol.com, click the button there, and get a free trial. It doesn't cost you anything. So you can see exactly what we're rocking here every episode. And on behalf of Mr. Corner Office, who's not in his corner office, got to hop on a plane. So thank you for doing that, Mr. Russell. Well done. And also from the Greasy Meatball himself, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for tuning in live, we'll see you next week, hopefully a MixLR for the live stream. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.